Hello and welcome to the Weekend Investing Daily Byte. Today is 4th of July, Independence Day for the USA, and the markets are closed there for a very long weekend. While the markets in the US are closed, the Indian markets are certainly not sleeping. Nifty, for the fifth day running, opened with a gap up this morning, came back, filled the gap, and closed higher again, 19,389. If you see this formation, you can expand your charts. You can see here since last week you had 5 trading sessions, with each session opening with a gap up from the previous day and closing at a subsequent high level. This is a very rare formation. I eyeballed the last 20 years of data. I don't think this has happened before. 5 straight days of gaps and higher closing. Today it was a closing below the open, but still higher than previous close. So extremely strong formation. Of course, a little overbought on the hourly and the daily cycle, but even if we get some consolidation or some minor correction, I think still a very strong signal that this is something big that is in the making. And usually what happens is whenever the markets take off, you can take the example of post COVID run, or whether it was the takeoff from 2014 levels, 2016-17 rally. Whenever markets are taking off like this, usually most people will step back and say, okay, I've missed this last 3 months of a rally. Now let me wait for a substantial correction before I get in again. And sometimes that substantial correction does not come around for quarters and years together. And there have been several such instances where people have missed out because they wanted to invest in a situation where the market is down 10% from where they have seen it. Sometimes it works, sometimes it doesn't work like that. The valuation gurus in the market, the guys who do the fundamental valuations, are also on the same boat, saying that the valuation of the index that was there year and a half back, and with the index having consolidated for the last year and a half, the earnings have caught up and the PE ratios have substantially dropped. We can do another market update based on that in the next few days. But that's what's happening, that despite market being at a new high, they are not so expensive. That's what they are saying. And from a momentum perspective, it is very clear that the market is in a strong momentum mode. Today's Nifty heat map, on the fifth day of running, several sectors started to correct. So you can see oil and gas correcting, you can see some corrections in some banking names, but Bajaj Finance and Bajaj Finserv were the leaders of the day. IT stocks also leading up, pharma stocks leading up, auto muted, but Aisha Motors making a strong down move. And we will talk about this bike wars in the second half of this video. ITC along with Britannia sort of muted, Bharti Airtel also dropping off along with Reliance on telecom, and others like NTPC, L&T minor gainers today. So in terms of the sectoral overview, you can see PSU banking for the day two running at 1.9%. The beauty of the Nifty run this time is, and in fact it happens all the time, is that the sectors keep rotating within that run. So while the first 2 days were run by some other sector, the last 2 days here have been gaining on PSU banks and IT stocks. So that rotation is happening, so that Nifty is kept alive while internally they are each sector is correcting. So infra took a correction today, autos took a correction today, commodities and consumption also took a correction today. But overall, for the entire week, PSU banks now almost plus 8%, only to be followed by IT at 3.2%. Nifty on an average for the last week is up 3%. Uh, Real estate has been quiet for this last 1 week, but just look at what it has done over the last 3 months, up 33.8%. So several sectors have done well: autos, real estate, even pharma. Pharma, I think, is a dark horse, hasn't performed in the last 7, 8 years, but is now coming around to that. PSU banks had not performed for almost 12 years, and now coming around to that. Mid caps were not as strong as the larger caps. Almost a bearish engulfing candle on the daily, so we may be headed into some sort of a consolidation here. That is okay. Small caps closing higher than the previous day, but lower than the open. Still a new high close at 10,652. So doing quite well there. Bank Nifty also is a bit of a tough day, I think, for intraday traders. It sort of had a high of 45,600 plus and a low of 44,900 or 45,000. Quite a wide range for a day. Closed virtually where it opened, but still above previous day's close. So quite a strong uh, uh, makeup for the banks also. Now let's come back to the topic of the day. So three contenders for these bike wars are there: Hero Moto, Bajaj Auto, and Royal Enfield through Aisha Motors. These three are now contending for this high, aspirational side of the high cc bikes. So 300 cc, 400 cc. Everybody was happy making these 125 cc bikes. So Hero Motors, TVS Motors, Bajaj were doing that, and only Aisha Motors had taken the lead in terms of offering that uh, aspirational segment in biking through Royal Enfield. And Aisha Motors today holds more than 80% market share of that very rapidly expanding segment of that market. As consumption patterns are changing, and the average aspirational level of the Indian youth is changing, and their, you can say, average incomes are also going up. There is more and more desire to buy bikes which are 300 cc or 400 cc, a bit of uh, having fun, and also just trying to be a bit different from the mundane 100 and 125 cc bikes. I mean, if you actually ride one, you can know the difference, that one is just taking you from point A to point B, and the other one you are flying from point A to point B. So that is the difference, and most people want that. So Aisha Motors, of course, Aisha Motors also has joint venture with Volvo for commercial vehicles, etc. So you really cannot compare the stock price, because the businesses are multi-fold businesses. Also, Bajaj Auto is also into providing three wheelers and all those kind of vehicles for African market, so on and so forth. So not strictly comparable, but still the growth since the last decade and a half has been phenomenal in Aisha Motors. The stock is up 115,000%. Uh, Bajaj Auto has been up 1,500%, and Hero Motors is up 500%. So, I mean, given that you invested in any of these three, you would have made money. But of course, Aisha Motors has done phenomenally well. Now, since the COVID, or let's say since the last 2 years, Aisha Motor has still performed very well. So the last quarter results also up, I think, somewhere close to 50%, and very good growth numbers coming out of Aisha Motors. Again, 100% growth in Aisha Motor stock. Bajaj Auto also 70%. Hero Motors up about 28%. So Hero Motors has been the biggest laggard in the two-wheeler space, and Bajaj Auto has off late, starting to come back. But the biggest challenge is now here for Aisha Motors, because this virtual monopoly that they had on this segment of Royal Enfield of 80%, and of course exporting that also, is now going to get challenged, because Hero Motors is launching, or in fact today has launched, a bike made jointly with Harley Davidson. Harley Davidson, if you remember, had made a solo attempt in the Indian markets failed, shut shop, and came back with Hero Motors. They have launched a 400 odd cc bike. But the beauty is that the bike has been launched, which is even below the lowest range for the Royal Enfield bike. And Royal Enfield bikes, I think, go from 2.5 to 4 lakhs, and this is the inaugural launch is at 2.25 lakhs, something like that. So there is going to be a queue. There is going to be a huge wait list for this Harley Davidson, and the brand is so strong that everybody wants to ride a Harley, and that's the buzz that is causing what is happening in the market today. So today we saw about a 6% drop in Aisha Motor stock. This is the Aisha Motor stock, the Aqua line. The change in the last 6 7 months has been that Bajaj has performed at plus 23%. Eicher has languished at minus 2%, and Hero Motors is now coming up at plus 6%. So, Bajaj Auto has also tied up with Triumph Motors. They are also coming out with a bike of, I think, 350 or 400 cc, which will be launched in second half of this week only. So, there is going to be a huge bike war here. And of course, consumer has all the choices that is happening. But what I want to say is that price moves now on these stocks is going to lead the narrative. So be very careful in tracking the prices, how they are changing in the next few months for Bajaj Auto versus Hero Motors versus Aisha Motors. I think the market is going to tell you the verdict, which bikes are going to succeed, which bikes are not going to succeed, who is going to capture more market share. Because Hero Motors has not performed for a, I don't know how long, and that is sort of the dark horse in this race, I think. But again, yet to see the public response. But the Harley name could be a big leverage for them with the great pricing that they are coming in. Maybe Hero Motors, it can be a good candidate for your trading perspective also. The chart for Hero is looking quite good, somewhere near 3000 rupees. It is kind of a breakout level where it can go to 3500. But Aisha Motors certainly will have this pressure uh, on it, and Bajaj is yet to see what they're going to announce. But the stock price is indicating that Bajaj also has a winner on their hand. So thank you so much for watching this episode. Do let us know your comments on this content. Do give us a like or a subscribe and share it with your friends. Thank you. Bye. Investments in securities are subject to market risks. Read all related documents carefully before investing.